In partnership with FinTech Finance, Banking Circle interviewed influencers from the payments and banking industry, asking them for their take on how the ecosystem is changing based on the key themes identified in its white paper, Bounce Back Banking. The white paper explored how financial institutions can adopt new approaches to help SMEs recover from the impact of COVID-19, with the discussion centered around how the acceleration of digital adoption is changing the banking ecosystem. We would like to thank all our interviewees from Santander Digital, Meniga, ACI Worldwide, Mambu, Paysafe Group, Weaver, and the Emerging Payments Association for sharing their insights. How is financial infrastructure changing at the moment?
Financial infrastructure is changing a lot. We have several trends in banking, in the banking industry. One is open banking, which is dramatically changing the way we think of infrastructure. Now everything has to be open and has to be ready to interact with third parties. Back in the day, banks were closed, robust, but very solid infrastructures, but closed ones. And now we're betting on the openness of the infrastructure and the platform in order to build new services as platform as a service, banking as a service, this type of new services. So it's changing dramatically. Application programming interfaces, the so-called APIs, is something every bank I know and I interact with are betting on APIs. It's a tough journey. It's not something that you can do quickly. It takes a while. Why? Because as I mentioned before, the infrastructures that we used to have are on-prem, are still on-prem. Most of the banks that I meet are 20 to 25% already cloud in this journey to cloud, and APIs is a driving force to open to the ecosystem, to interact with third parties, and these third parties can be fintechs, can be other banks, and also can be the regulators as well. So it's been a journey. I think we're traveling in this journey together, and there's plenty of opportunities.
What I would say there is that it's becoming more strategic, and banks and fintechs are building optionality and modularizing their systems and solutions. So separating the front end from the back end. More and more services are now consumed via APIs, and delivery models are changing. And with the rise of open banking, that's also blurring the lines between kind of what's inside a financial institution or a fintech and what's outside. So interoperability and the ability, for example, for banks to connect with APIs of fintechs and offer their services as part of their value proposition is becoming much more important than it was before. At least the optionality, the strategic optionality of doing so, because that's something everyone expects to increase. So being more strategic about having different options, I think banks are realizing that they may not have all products in the future on their own balance sheet and build them all themselves. So how can they build infrastructure that facilitates working or partnering with fintechs while they also may compete with them? And also that goes both ways. I think fintechs are building solutions and having optionality in terms of how to deliver them in partnership or as part of their own apps or services. So much more strategic, much more API driven, and lines are blurring. I mean, Meniga, my company, is a big partner and kind of innovation partner to banks. And I mean, one of our main slogans is we kind of make digital banking personal, and that's for a reason, because to get to the next level, to keep being interesting in the eyes of your customers, to kind of, you have to become more than just a place to transact and do banking where one size fits all. You have to demonstrate that you understand your customer and that you can use their data to kind of give them better services. And that means make them feel that you know them and give them some value, like based on their individual preferences. So that's really, I think, what's driving a lot of digital projects. But the devil is in the details. I think it's you have very different degrees of execution success. I think we're still very early stage in this.
The term fintech didn't exist 10 years ago, and so we've seen a lot more investment in there. So we're seeing that sort of proliferation of the digitization that's driving a need for the larger institutions to evolve from their legacy 40-year-old platforms to new age technologies. But we're also seeing sort of fintechs and challenger banks step up in a greenfield environment and very much starting from that point from the word go. So a lot of change. And I think the last, it'd be wrong of me not to mention how much that's starting to accelerate with COVID.
It's not just a cost play, it's an agility play as well, allowing people to scale quickly up or down and allowing them to roll out into new jurisdictions at a lower cost base, obviously, but launch products much faster. That's definitely something that's changing a lot in the mindsets. I actually think COVID's been an expediter of this. So it's gone from being this perceived technology risk to a very real business risk of not having this ability to be agile, to launch to new markets, all the things we've said. That is something that the larger banks are learning from the challengers and from the new neobanks. And we're certainly seeing it play out in the marketplace that bravery or that drive for more innovation and customer centricity is definitely a trend we're seeing.
Banking is becoming slowly but certainly a commodity. So, for example, I think you have been, there are so many new things coming into the picture, like there is a definition, for example, of banking as a service or banking as a platform. And basically the idea here is that you are, so in the old days, if you would like to build an application or if you would like to offer a product, what you would have to do is that you would have to begin from scratch, build the IT infrastructure from scratch, build the database, etc., making the connections, and then being in a position to offer the product. Nowadays, you have many providers that are allowing you essentially to rent the bits and pieces of the infrastructure through APIs, the so-called application programming interfaces, and in a plug-and-play mode. So basically, what used to be very expensive and very time-consuming to launch, today is becoming, actually, it's a reality. So today you can actually launch a financial services product using both the infrastructure and the licenses behind by using somebody else's capabilities. And this is a new reality. And what I mentioned before, so let's say this change of the financial infrastructure has allowed, all the more so lately, new players to very quickly come to the market without having to wait for ages to build a new product. So, for example, whoever has a nice idea about the product, about something that is a gap, doesn't actually have to build it from scratch and wait, let's say, a couple of years to be in a position to test it on the market, but can do so in a few months' time, see if this is working, and then make the decision if it makes sense to invest more in this in this service. And actually, this is one of the so most of the, I would say, most of the most well-known fintechs that are that exist today have started in this way. So basically, they have been renting the infrastructure and the license from players who are doing this to begin with. And once they realize that they are in a sustainable business and they want to scale up, they've made a decision to move forward.
I think we're in an evolution from what started out as being the now familiar sort of e-commerce way of conducting business online, and over time that has evolved. So we now have applications like Uber and Airbnb that don't just do a transaction at the front end, but also do a lot of digital movement of money in the back office and also sometimes to the supply chain. That is driving a lot of innovation in payments as more and more digitization happens across more and more industries. And as that digitization becomes more deep into, from the front end into the back office and then into the supply chain, financial infrastructure has to evolve to support those kind of new developments.
How has the acceleration of digital adoption moved forward when it comes to actually trying to get the financial infrastructure right?
It's very important to build a sustainable product or service based on something that you know is functioning and is functioning actually well. Otherwise, if you get things on the not on the right foot from the beginning, you will have issues in terms of scaling your product and your service in the future, and in terms of actually meeting the consumer demands and the expectations that you actually want to meet. So I think this is even more important, because the customer experience has even more gained in terms of significance on how you kind of attack the market and how you are positioning your product and your proposition towards the customer. So I think you cannot afford not having the right infrastructure, which is probably key to how your product is going to evolve.
I think we've seen a huge acceleration now with COVID. I mean, we work with dozens of banks across the world, mostly in Europe, and the emphasis and acceleration of digital adoption. I mean, everyone knew it was important and these were big projects, but they all have now renewed importance. And in many countries, you haven't been able to visit branches or do things non-digitally. So now, if it wasn't fully clear for everyone before, it is now. So that it really is also putting focus on getting the digital infrastructure right and being able to, I think there's a little bit of shift now to back to basics. I think banks over the past decades, as an example, have been looking to deliver all their products digitally, maybe not necessarily innovating tremendously, just making sure you can do everything in their mobile app, like whether it's applying for a mortgage or moving money. And now I think when people have been cut off from other methods, I mean, it's becoming clear who have done a good job, and I think most banks are finding that they have some gaps. So there's been a little bit of back to basics, making sure that kind of what was missing is now fully digitized.
Large techs or big techs, the GAFAs, are providing us with a very bad time when coping with the level of services that they're implementing. So I think it's a catalyst, all this phenomenon, and we get inspired as a bank by the type of services these companies are performing and are providing to customers. I think the name of the game is partnerships. Is something that is all over the place. We're looking for partnerships with this type of companies. Why? Because I think there's a perfect combination of the client services provided into mainly apps, I would say, but the bankerized solution, the bankerized part, is something that banks do pretty well. We've been doing this for centuries, and I think to a certain extent, these symbiotic relationships you can establish with large techs are quite profitable, or can be quite profitable for both parties, and also can end up in a better service for the client. I get lots of questions regarding whether the large techs are becoming part of the banking ecosystem or are jumping into financial services. My answer is yes, to a certain extent. This is happening, but not in every single part of a value chain. I see it happening in payments, and I also see it happening in lending, in the medium tier, low tier of the loan book. Yeah, you see more and more large techs trying to lend money into the clients. But there are certain parts of the banking industry where the large techs are not interested. And this is where I think we can play an important role in providing the platform. Back in the day, I would say it was more a battle of who has the best product. And nowadays it's more about who has the best platform.
You know, the innovation in customer onboarding, KYC, know your customer, it's been largely driven by digital. The traditional way of that banks used to pick documents and decide whether to open a bank account for you, that has really shifted very significantly as digital experiences started to provide a better way. And the same thing is going to happen to all the aspects of finding, buying, getting onboarded for financial services. Digital is simply going to drive a whole lot of innovation that financial infrastructure needs to respond to. Financial institutions, have evolved over many decades in the way that they are selling their products, not necessarily selling solutions as the ones I've described. So I think we are at the start of a very long journey in which the best brands, and they don't have to be banking brands, will show what can be done by basically embedding payments and finance into digital experiences. Banks will have to reshape their thinking and invest much more in digital to be able to keep up with brands that already have a degree of customer intimacy, like Apple. You think of the way Apple would do financial services, and you start to see how much of a journey banks have to go through to get to that level of customer engagement and generally customer interest. The next bit of transformation, I think, will happen in the back end systems and in the back office. And ultimately, banks can't do everything, so they also have to go and digitize a much bigger supply chain. So that's why I think this is going to take years and years to run, as sort of innovators show what's possible.
The whole move of digital adoption is I think the fundamental shift in banking probably for the last 20, 30 years. And not just that it's enabled the big players to move to something that's a more controlled cost base, more agile, not that it's just opened the market for the neos to come in. It's actually brought a lot of new players, a lot of new ideas, and it's really changed the way that people are thinking about banking. It's the only true way I can see as having a return to relationship banking moving forward, because the digitization makes that channel, that openness that comes through for the customer a lot more predictable, a lot more agile. I'm using the word agile a lot, and a lot more innovative in how I experience a bank compared to how you experience a bank, Ali. We may want very different things, and so having that digital adoption, that digital experience, is very key. So I don't think it's fundamental to make the right choice about going for which infrastructure, but I do think it's fundamental to make the choice to go digital and therefore not try and build that on something that's legacy or old way of working.
The additional factor that emerged is the importance of collaboration between different players to deliver new types of financial services. And of course, the most common one is the collaboration between a bank and a fintech. Because if you have to work together, well, suddenly you have the question, okay, where do we put the infrastructure? And of course, if it's a shared infrastructure, then the cloud becomes the by default solution of any modern financial service. Another big factor, which is not often mentioned, is the outsourcing at international level. So for example, even within the same banking group. So imagine a banking group that has several subsidiaries or branches in different countries. Traditionally, in the past, every subsidiary had its own infrastructure because of local needs, local regulations, etc., etc. But now, taking into account the context, and of course the low interest rates are very fundamental here, so banks are looking to save costs. And the best way to do that is to centralize a common infrastructure, and if it's an international bank, they will definitely want to have a common infrastructure that serves several different countries.
The acceleration of digital adoption has led to, on the payment side of things, for example, payments are happening instantly. There's no more, hey, we're going to run a batch at the end of the week. There's that kind of attitude has gone. The sheer volume of that information, of that data, of those digital transactions has just gone through the roof. What does that mean for actually getting that, again, that underlying infrastructure right? Because that seems to only be accelerating.
Well, first of all, you should pay attention to the fact that it might appear as an instantaneous payment to you, but it might not be. Why? Because, of course, when you pay, the money is deducted from your balance right away. That doesn't mean that the receiver has the money right away, okay? So be careful to that, because many services appear like an instant payment. So yes, there is still a lot of room in terms of the payments that would support generalized instant payment infrastructure everywhere in Europe. Now, of course, in the UK, you have the advantage of having the faster payments network for a few years now. But if you send money abroad, it might not go that fast. And it's the problem that you see now in Europe, in different countries. They are not at the same stage of adoption in terms of banks proposing instant payments as the by default standard. Sometimes it's not available yet, or sometimes it's a paying service. And of course, you can imagine that in the future, instant payment will be the norm and it will be free as part of any banking package.
I think the society at large, we're very split by the segmentation. And so if you think about somewhat at the bottom end of Gen X, or what we might call the Zennial, in between Gen X and Gen Z, and then Gen X, typically not 10 years on top of me, are normally perceived as being pretty anti these new technologies. I'm very much for them. I like to use them. I do like to augment them. But I think how, as a bank, what your strategy is to kind of attract and retain these different segments depends on your approach to digitization. But one thing's for certain, I mean, I think about the last 15 years working with the banks in digital, I've seen my conversations go from, well, I don't do this and I don't do that, which is what happened 15 years ago, to now the guys I'm talking to are younger. They're in the same positions, but they're younger, they're more digitally native and digitally savvy. And their conversations are more pressing me to say, well, how do I do that? How do I enable this? Because the customers who are coming behind me, they were born expecting it.
Do you see the bank fintech partnership as something a little bit short-lived and a bit of a stopgap measure while banks' tech platforms become equivalent to that of fintechs? Or is it something a lot more longer term in this partnership build-up?
I'm smiling because this covers pretty much everything I believe in one question. So I think it fundamentally can't be temporary. I think it has to be a completely different way of working. It's all about collaboration. It's all about building what we at Mambu call composable banking. And it's about building that ecosystem, having that fair share of wallet. You have to be aligned on strategy and have to be aligned on value outcome. But when it works and everybody does what they're best at and what they're great at, you get a great outcome. You look at the way banking has always worked or the way ecosystems worked, and it very much is a flow of we can do everything. The things that are high value we can do, but generally we also do the things that are low value, high cost. If you can take that subset out and give it to somebody else to do, and you can drive a better experience, and also you can allow the parts to interconnect and pull out. You know, something we say quite often is that banks used to be built to last. Now they're built to change. If you want to do it all yourself and you're trying to get to that world where you've got the agility to change and drive innovation, I do not see as that being the smartest, most cost-effective or highly innovative and agile approach to running a bank.
I think with venture capitalist investment, with the entrepreneurial spirit, clearly we've gotten spades in the UK, in the hotspot areas, you know, the FinTech North, the London kind of scene. I think there's a lot of investment going in there. We're seeing some very clever people driven who love the work they're doing. And we're seeing some really cool ideas and concepts, and some of it moves into reality. And I think that's healthy for the industry. And I think the banks then are now, and to be fair, they have been for the last couple of years, embracing it, bringing it in. How can we do more of what they're doing? And I think having worked at the banks myself, when you get into one of these digital programs, they can move very fast, but they're in phases. And so if you bring someone through the homegrown from a bank, you have to go through these phases. It can take multiple years to get something into the market, whereas a fintech can get something in the market, in a matter of a few months, fast fail, multi-test. And so when the bank's then working with these fintech partners, then that gives them the ability to kind of get things into market faster. The challenge that banks then have is, how do I stitch that capability into my capability quickly, digitally, seamlessly, in a way that has to be scalable, fault tolerant, doesn't fail, can handle a volume, all of that sort of stuff. So that's the challenge the banks have got there. And we're seeing some banks, I call them out, like BBVA, for example, doing some phenomenal work in that space. And I think what we'll see is the rest of the industry start to kind of get into that point. But it feels to me like we're probably still some time away, a couple of years probably, maybe a bit longer, before we start to see that at the industry scale. But we're definitely seeing the moves in the right direction there.
The fintechs that are specializing in one area, especially payments or payments infrastructure, they have a bright future because there are so many banks out there which have other core businesses. Everyone at one stage has to be better at something, and this is what the clients basically want to use. So the right mix between the traditional players, the specialized fintechs, and all of this interacting on a shared infrastructure, you name it cloud or whatever you like, that basically is really the future of finance.
Banks are now opening up and adopting some different strategies in response to the neobanks, in response to open banking. And generally, I think we're seeing a breakup of the value chain where there is more opportunity for collaboration, where banks are offering fintechs products as part of their own apps, or even becoming marketplaces where they offer several products for different, in different financial product verticals, like offering a small company loans from 4 different SME loan providers and becoming the marketplace rather than having all these products on their own balance sheet. That's one example of a strategy. And but I think that's one strategy. Others will continue to only offer their products. But I think the point here is that this modularization breakup of the value chain, where people can partner or compete is in different ways, is the start of a much broader trend. Banks realize they can't do everything themselves, and there are so many new services and so much innovation happening. They may want to keep the core banking products as their own, but then they're offering things like subscription management or cashback reward. So there's all sorts of services based on financial transactions or related to their services that banks provide that like a army of startups and fintechs is offering. So that collaboration will only increase, but partly it's super competitive. Banks are also copying and catching up to what the neobanks or startups are doing, but I think they're increasingly selective. They're increasingly opening to partner, at least in some ways. And sometimes they start by partnering, then they copy or compete, but this is not going away. That's not a temporary thing, that will only increase.
I would say that the biggest near-term threat for most banks is not coming from fintechs, but from other banks or traditional, or let's say players that are already in the market, leveraging better fintechs than they are doing themselves. So your competition might be, competition for banks is obviously banks. So competition might be leveraging in a better way fintechs than they're in a position to do. So I think that's one piece of information that we have to consider. On the other hand, I don't think that the collaboration between banks and fintechs is going to go away. I think that it's going to intensify. We see many examples. I think the introduction of open banking in many markets across the globe, Europe, through PSD2 is a key example, is a sign of this becoming all the more important and key to making things happen. And one of the reasons why I think that this is probably a win-win setup, not a win-lose setup, because if it's a win-lose setup, it cannot work, is the fact that most of the times fintechs are focusing on niche markets, or let's say niche products, or at least they are starting from this and use them as a basis. And this might be, for example, areas in which banks, they might not have the resources, or they might not have the time, or they might not see this as a strategic option to go and invest in this market. So actually, you have fintechs focusing on covering gaps in the market. And then if they come up with the right product, I don't think that in today's market, you can wait for 1 year or 2 years to build the capability on your own, because then you're out of the market. So basically, your only option is to do what? Is to use a partnership option, go to the person or to the company, to the fintech that has the best product or capabilities in place. And actually, again, here we're going to the customer experience side, because at the end of the day, everything is about customer experience. and making sure that the partnership is working for both parties.
I know there's been a little bit of a hype in the market about partnering up and yeah, why not, this type of things. At the same time, banks used to play the so-called level playing field. When a fintech was successful, then everyone was looking into the regulation and why these guys are not complying with these and this type of dynamics. I would say that we've seen lots of fintechs flourishing in favorable conditions in the environment, leveraged on exponential technologies. Now, in these current circumstances, we will see which ones are strong enough to survive and which ones are top-notch, and we'll get a little bit of hype out of the market. I wouldn't say this is going to be a bubble that is going to burst, but we see more and more the ideas that make sense and made sense in the past are standstill, and the ones that were like so-so, quite interesting, but also implementation problems, are falling down. And I would say that the fintechs that survive would come stronger, and the banks that understood the opportunity behind a partnership would also come stronger.
Yeah, we're in a period of transition, actually, that some banks, actually some fintechs will become banks. In fact, some already are. Some banks will themselves invest in digital first, businesses. So the banks try to be fintechs, fintechs try to be banks. But I think in the end, the world will settle for less vertically integrated financial brands. And I think it will settle for a number of brands that deliver, that deliver solutions or deliver experiences. And behind those brands will be much more sort of wholesale banking that's much more efficient and much more dealing with the underlying financial service rather than its delivery and its marketing and the customer experience behind it. And so there is this dance going on right now where banks have got a lot of that infrastructure available today, and fintechs want to get hold of it. At the same time, banks realize that there is a new way of marketing these services, and they're trying to emulate the fintechs. I think that game will only end up being, as I said, in less vertically integrated offerings with a multitude of brands at the front and a much smaller number of highly efficient, larger wholesale banks at the back. When you factor in, although we spoke about fintechs and the banks, you also have big tech, right? Which have the heft to compete with the banks in terms of their balance sheets in some cases, and have the tech, have got the brand and the obviously the technological know-how to give the biggest banks a big run for their money. So I honestly think what's happened is that the banks used to be isolated in this world of being licensed, and they had the market to themselves. That has been blown up, and the first early adopters, if you like, or early entrants into that new market are the fintechs. But we ain't seen nothing yet, is what I think.